The broadcast is now starting. All attendees are in listen-only mode.
Hi, good morning, and thank you for attending our webinar this morning. I'm Jim Guinan, Annuity Sales Director here at Insurance Agency Marketing. I want to welcome you to our webinar today. It is on prospecting the 401k market, and I'm going to go over a few topics or sections of this. One will be in particular talking about in-service withdrawals and how that can generate sales for you, and also just talk about working with clients on their 401ks and what are some options that they have and what are some products that might work for them. So in a minute I'll get to that, but first I want to talk to you a little bit about what's going on here at Insurance Agency Marketing. And we always want to talk about our referral program, and this is a great way to build your business as a producer. Many IMOs have referral programs. I think ours is very good. $50 paid to you as a bonus when a referral contracts with one of our companies, and as they continue to write business, we will pay you, in essence, an override on their ongoing business. And this is unlimited, so you can refer a number of individuals, people that you may know working in the life market, fixed annuity market, and those are good producers. We certainly appreciate it, and for that, we can afford to pay you an override because we spend a lot of money recruiting agents, as you might guess. So again, thanks for referrals that you've given us. And we also, of course, want to talk about new producer bonus, which is also kind of unique. For as little as $100,000 of annuity premium in your first 6 months of writing business with us, you can actually get a $750 cash bonus. As you can see, these are thresholds that you would hit as you get through that first 180 days. So we want you to do well with us, and we want to reward you for what you're bringing to us here at Insurance Agency Marketing. I think our back office support and our support in general here is very good. People that help us even are people that help you, but you may not know who they are. People that run our illustrations, that take a workload off of us, that are really helping you with your business. I'm going to talk a little bit about our website, but I will say that there's a lot of information on our website that can help you, including term quotes. Our annuity rate book is updated there. And there are other tools that you can use that we use every day too. Of course, our new business team that helps process your business, life and annuity, as it's being sent through our group here. Our contracting department, I think, does an excellent job too. So again, we do work well as a team here at IAMS, and our goal is to take the workload off of you so that you can get out, talk to people, write business, and not be sitting on the phone all day. Our creative department is a very busy department these days with Josh, Tasia, and Andrew. If you are thinking about developing a website, or you have a website and you'd like to update it, you may want to visit with them. This is a great time of the year, and I know they've had a lot of requests for website design. Also, ways to prospect your clients, branding, email newsletters, email marketing. Those are all things that they can talk to you about. So please lean on them for some ideas. Maybe it's a good time to kind of update your brand, maybe develop a brand. I did mention our website. I use the website here every day, mostly for quotes that I need. We get a lot of income rider requests, and there's a great tool on our website that we utilize for that. Also, just searching for products based on age or benefits, features, and maybe a state that we're not familiar with, so we want to make sure. And so I use that quite a bit. As you can see, there's other tools and information that you can get through our website. Again, our current annuity news, our annuity grid, which is up to about 40 pages now. It's the same product info that we keep at our desk in the annuity department. So it has products by carrier, by bonus. It also has an income rider section, and then separately a multi-year rate section. So again, our webinar schedule is out there, and of course our resource library. So if you haven't been to our website, it's www.iamsinc.com. That's IAMSINC.com. Pretty easy to create a login, and there is a lot of valuable information out there. Financial calculators, for example. Okay, now I want to talk a little bit about IAMS Wealth Management, and in a minute I'm going to launch a poll question here if you'd like to get a little more information. But IAMS Wealth Management has been in business now for about 2 years, and we have seen a lot of growth in that area. If you see a lot of this from us, it's because it's growing quite rapidly. There's been a big demand to get a registered investment advisor, I should say a Series 65 IAR investment advisor rep license. Seems like a lot of it came from the DOL, but whether the DOL actually goes into place in July of 2019 or gets pushed off longer, we are going to continue to grow this part of our business. And so if you are looking at expanding, looking at ways to not just increase revenue, but develop relationships for the long term. I know working with fixed annuities and clients that I know there's a lot of money left on the table that if I had the right license, I would be able to help those people. So it allows you to reach out to clients of a different age, perhaps, than you've been reaching, assets that you've referred to someone else or just not done anything with. So if you have interest in getting a Series 65, you might want to answer yes to this next question I'm going to put out here. And if you'd like to just get some information or get a call or an email, just let us know, answer yes to that question. And Charles Hiring and his team will be glad to visit with you about, what are some requirements of you, what are the costs involved, and really kind of how that whole program works. And I won't go into it much more than that, but again, we've seen a tremendous growth in this this area of our business here. And again, it is a separate division of our brokerage. So I appreciate your responses to that. And again, what we will do is we will most likely reach out to you with a phone call first, and then whatever information you might need. It's something that you may want to think about here in 2018. Okay, now moving on, and just about ready to get into the 401k topic, but I want to talk about our Life and Annuity Academy. And our next Life and Annuity Academy is scheduled for March 28th through the 30th. And if you're currently writing fixed annuity or life business, we may want to visit with you. So we will be sending out a registration link and some information after the webinar is over today. And it does have, I believe there is a registration link in there. It may or may not say the date, so I will tell you again. It's March 28th through the 30th. It's a Wednesday through Friday. And as you can see, it's a 2-day producer training. For those individuals that we invite, it is all expense paid. But again, we're looking for those people that are, in the field writing the business. This is not a training if you're new to the business or really new to selling. So we're looking for producers, around 35 to 45 producers for this academy. And it will be this particular one will be at Athene's home office in West Des Moines. So we will have a future one in Omaha. I imagine sometime maybe this summer or fall. So if you have interest in this, again, way to grow your business, take it to another level this year. I would suggest sending in a registration, and we'll be glad to call you, and we'll visit with you about what it is all involved in. And again, we'll be talking with you about the business that you're currently writing. So I launched the poll. Again, if you'd take a moment and answer yes or no to that, we'd certainly appreciate it. I would be glad to answer any questions you have about that after the webinar. If there's a manager that you already work with, please reach out to them. We started today in our morning session. We did review some agents' registrations that already come in. I believe we already have 120. So again, we'll be glad to look at it, visit with you. The registration that you send in does ask what type of premium you're writing, who are you licensed with, and how are you developing your leads and things like that, so we can get an idea of who you are. So again, if not this training works, there will be future ones. We don't have the dates for those yet. Okay, thanks for your consideration of that. Again, like I said, after the webinar is out, you'll receive an email from us that'll have more information and a link to register for the Academy if you'd like to be considered for that. Okay, and finally, I did want to mention here, this is coming up soon, but it is our 2018 Marketing Summit. This is a social and educational event that will be in Scottsdale, Arizona, February 25th through the 28th. And we have yet to decide, or it is yet to be announced, our next summit, which will actually start, and we'll start working on that here in January. So we don't know quite yet where or how, but I did want to mention this to you today, again, for those of you that are not familiar with our trips and our marketing summits, that this is a quite nice destination, Boulders Resort and Spa in Scottsdale, Arizona. Again, that's coming up next month. And I believe that we have around 65 producers that will be attending this event. So, okay, so now I want to talk to you about our webinar topic today, and I appreciate your patience in getting here. Something that I have a little experience in with clients that I work with, but it is prospecting the 401k market. Again, this is a valuable source of new business for the insurance professionals like you. And before I talk a little bit about some of the nuts and bolts, I did want to give some information to you that might kind of give you an idea of just how big this market is. I have not gotten updated numbers from the ICI. I've been working towards that, but according to the Investment Company Institute, as of June of 2014, 401k plans alone held an estimated 4.7 trillion in assets, and that represented nearly 20% of the 24 trillion that are in U.S. retirement assets. By comparison, 10 years before that, that number was only 2.2 trillion. How many Americans have plans today? It seems like everybody's, talking about it. Everyone you talk to has some retirement plan at work. In 2013, nearly 80% of full-time workers had access to employer-sponsored retirement plans, and more than 80% of those were participating in it. And if we talk about companies that are a little bigger, for example, if their employee number is 500 or greater, that percent that have access to a plan, 89% have access to it, and 90% participate. So again, larger companies typically have better plans, and there may be more money for matching and things like that. So that may be why. Now we talk about balances in these plans. What would be an average 401k account balance? Again, this is going to change all the time. It's going to change from year to year. But to give you a snapshot, according to Fidelity and Vanguard, for baby boomers ages 50 to 67, that number was almost $127,000 in March of 2013. And those people that are over 55, like me, 55 years old or older, that balance goes up. Of course, it was over 150,000. And also of particular interest, over 60% of these 401k plan balances were invested directly or indirectly in equity securities. And in 2014, it was up to over 64%. I'd be very curious today, right now, as we speak, what that percentage is with the way the market is doing. Okay, so just a brief recap here. More money is being held in 401k plans than ever before. More people have access to it and are participating in these plans, and the average balances are well over 100,000. Again, the average balance. There are many people that have a lot less than that, of course. But the other reality is that people are changing jobs and their careers. So when they're doing so, there are decisions to make. And so recently, the Department of Labor reported that the median job tenure is just 4.6 years. And so since people are changing these jobs and careers, they are faced with a number of questions and decisions. One is what to do with my retirement plan. And do we leave it where it's at? Do we move it to a new plan if that's an option with the new employer, or do we just roll that or direct roll that over into a IRA? So some choices, continuing with this, I guess some decisions would be, what are some advantages for these people what are some advantages, I should say, of leaving those retirement dollars where they're at? Well, certainly one is performance. The plan's performed well. There was a lot of choices in that program and it's done well. Many people would say, I'm just going to leave it there. It's doing okay. Another might be just simply a convenience, which is, again, maybe just not a decision to move it. Maybe they don't know what else they can do. And that actually is another option here I didn't put on the bullet points, but a lot of times it's a lack of knowledge or understanding about what they can do or what other options. And so just out of convenience, I guess you could say, they leave the plan where it's at. Another one that was pointed out to me, I'm not really a tax expert, of course, but I thought I would post it on here, is that there are some specific tax advantages for leaving, especially if it's an older plan. Again, I don't know a lot about that, but what I had read in the research was that there may be some tax advantages of leaving it where it was instead of rolling it over. Again, how do we find that out? We would find that out through our plan administrator, then talk to our tax professional to find out, what advantage or disadvantage that might be. All right, so some disadvantages of leaving a retirement plan where it's at. Well, investment options may be limited, or they may be heavily in company stock, would be one. There may be a lot of expenses in that plan. The plan fees may be really high or higher than average. I think another disadvantage is that, when you've worked for a company for a number of years and now you're not there, depending on the culture and the environment there, not being there could make someone uncomfortable. Just having a retirement plan through a company they don't work for anymore and having to go through for any changes in the plan through a previous employer. So it may be just a lack of control or access. And then another disadvantage is that there may be a lack of a good fixed only option. In a lot of the plans I've reviewed for clients, there's a lot of stock, bond options in there, and then oftentimes there's just a liquid money market. You don't really see a fixed annuity look-alike strategy, and that does make sense, but usually there's not a strong fixed guaranteed rate option. And so again, if that's something that they're thinking about as they're getting older and leaving an employer, that would be a disadvantage, or could be a disadvantage. Okay, so after reviewing the positives and negatives of whether to move that or not, and your client decides that they want to move that 401k over. Now, they can transfer that still to a new employer. So this would be assuming that a new employer either does not have a 401k plan or doesn't allow them. There may be a waiting period. I know recently for me, I made a change to come to IAMS about 4 years ago. I could not participate in the 401k for 1 year, which is not unusual. So you may find those people that want to move it away from where it's at. They don't want it there anymore. Maybe they want a fixed or guaranteed option that we can offer them. And so their choice would be to move that into a traditional IRA. And so we can help them with that. We would offer a fixed only or a fixed indexed annuity option. And what are some reasons why? Well, of course, they cannot lose principal because a fixed annuity cannot lose principal. There are no fees or expenses to that choice for a product. It can participate in some growth of the market without downside risk, and that would be describing what a fixed index product can do. They have 100% control of the account. Really, they have 100% control of the decision of the account too. So there are so many options out there. Fixed products with surrenders of 3 years up to 15 years, or products with bonuses, all types of designs. They can choose with the help of their insurance professional like you that, these are some things that I want. These are some particular wants and desires out of the retirement plan, but they control it as an IRA too. Once it's deposited and issued into that account, your client can decide if they want to take withdrawals, and for that matter, if they decide they want to leave the contract a couple years down the road, they can do that too. So there are also, in some instances, a choice of adding riders. I listed income rider. There are a few others, death benefit riders, which are less common, but the most common rider would be an income rider. If an income rider is chosen, most of those do have a fee. So I want to go back to bullet point number 2. As it stands, a traditional fixed annuity or a fixed index product does not have maintenance fees or fees to own the policy. But if they decide to choose a rider, many of those do have a annual fee rider. Okay, so what are some products that we can choose? Well, I don't have enough slides for all the products that are out there. It's quite lengthy. But I did want to mention a couple carriers that we see are very competitive and have been competitive for a while. And again, when it comes to income riders, which is the first choice here for what are some products we could choose, it would be an income generating product with an income rider. A lot of times there is not one carrier that stands out for all ages and all deferral periods. We have seen some good results over the last year from Athene. Athene has an Ascent Pro Series. Again, this depends on your state. It'll depend on the age of the person and how long they're waiting to take the income. But we have seen good results from them across the board. The great thing about Athene's product is that it gives them 2 choices for growth. So they can either go with guaranteed growth, or they can do a stacking, which means they participate some in the index on that growth. And then there's 3 choices for income. All right, so very flexible. For those people that like to have a little more potential, this product can offer that option. When we talk about accumulation, these would be products that people would say, I want to move over. I want my principal to be safe, but I'm not really worried about income today. I just want to continue to grow it, but I want to do it in a safe way. Okay, so I want to continue with the path that we had in the 401k plan, in this IRA. We also, by the way, want to make sure we ask the question if they need to be flexible, because today more and more of these products are single premium. But um, this is for an individual that just wants to continue to grow that but doesn't want to risk the principal anymore. And there are a few gems out there. One of them would be AIG's Power Select Builder. We see very good results when we do back testing on this product, because it has not only capped but uncapped strategies, 1 and 2 year, and those are showing very good results, especially in the Merrill Lynch strategy that offers. So again, these are great. There's no cost. There's no rider even available on this product. But again, just a couple ideas. Again, we see good accumulation from several companies: American Equity, Great American, even Athene. Income riders depend on how old they are. So again, Athene is one, but your sales manager can kind of help you sort through all of that. That's what we're here for, is to help guide you on what are good products, and any other ancillary ideas or features about that product that you may not be aware of. So, and I also threw on here traditional fixed annuity. Some of you probably wonder why, but we do see a lot of 401k rollovers or retirement rollovers, in general, where they don't want anything to do with indexing at all. So they want to know, I want to know what I'm going to make. I was conservative in my 401k. I want to continue to be that way. And we do have traditional fixed rate products with terms of 3 through 10 years. Give you an idea what those rates might be right now. The shortest term with the best rates out there right now are 5-year rates at 3.25. If you go out to 10 years, they're actually lower than that. So 5 and 6 years is a sweet spot for that. It's guaranteed fixed rate, no questions asked. They know what they're going to make for 5 or 6 years, and that's okay. So we have those products too. Again, now I'm going to launch a question here. If you'd like, by the way, to get any more information on these two companies' products that I mentioned, or if there's a particular need that you have right now, please answer yes to that poll question. I'll be glad to get you some information on either of those, or any carrier that might fit what you may be working on right now. So again, I'll be glad to get you information on these two. If you want to specify in your response, you could say I like something on Athene or AIG or both. That's fine. And I'll be glad to get you out current brochure information or rates, or even an illustration if you'd like it. And the same for traditional fixed. Again, we've lately seen a lot of interest in that. Of course, interest rates have been bumping up a little bit, and we even have rates at 3 years, and the 3-year rate's around 2.15, 2.15. Okay, well, I appreciate your response to that. I really do, and we'll be glad to get you any information out on those two companies. Again, I work with about 32 insurance companies, and the great thing about IAMS, and here's a little commercial, is we have a lot of carriers and products to choose from, and good ones. So we're not stuck on one, and that's why we have so many carriers, because we want to be able to offer you, to your clients, what's best out there. Okay, so let's talk a little bit about prospecting here. Some ideas where you want to prospect for 401ks. Some of this is not too earth-shattering for you, but certainly existing clients during your annual reviews, or really if you've just completed a sale with a client. I was always taught that's a great time to talk about referrals. But any time you're reviewing with a client, it's good to ask them, if you have not in a while, say, Mr. Client, hey, I know that you worked at XYZ company here a few years ago. Did you have a retirement plan, and did you do anything with it? I mean, sometimes we think we've asked that question, but both on the previous employer, but also part of your annual review could be, are you planning on moving to another position? If you do, or when you do, please let me know that, because one of the things that I've been helping clients with for years is helping them make that transition from one employer to another with the retirement plan. Okay, and then when we're asking about referrals to those clients, pretty much the same question. So it would be to them if we've not asked them, or to people that they know that we should be talking to. Again, do you know anyone that recently left an employer, or that will be perhaps changing a job that's mentioned to you that they may be changing a job? Well, please let me know if you'd like me to call them, or if you want to visit with them first, however you want to do that. Some other ways that you can prospect, of course, business owners, which you can call on directly, or if you have time to make it a part of your work week, to drop in on business owners, or perhaps you're familiar with a particular type of business owner. Maybe you have several clients that work in an industry, and you are familiar with the language and how to talk to them. Maybe those are people that you can reach out to. Again, it's not necessarily qualified, but it could lead to something. Calling on companies directly would be another, like calling into an employer, and maybe by referral of your client. Maybe your client works at a large company, or any company really, and maybe they can help you work together to reach out to an HR department. And of course, there are lead companies galore. And as far as companies that will provide you with retirees. Again, I would really do some research on that, because you could spend a lot of money and not get much for it. But one other thing I did want to say on this, when we talk about annual reviews, a few years back, I was working with an agent that was selling a lot of health insurance. This is going back a few years. And he came to a workshop at my previous IMO where we were talking about indexed annuities and how they can help clients. And he says, I think I'm going to start utilizing that kind of some questions in my, when I'm working with people on health insurance. He only sold health insurance, and I believe maybe some life insurance. He never did anything to do with, or had anything to do with, retirement plans. So he started incorporating a couple key cross-selling questions. Are you retiring soon, or do you know someone retiring? Have you got a retirement plan? Just a few, easy questions to ask. And he stumbled on to an individual that had a 401k to roll over, and I believe it was $180,000, something like that. And he said, that was really easy to do. And I said, keep doing it. So, we sometimes, we want qualified leads. And after this webinar, guaranteed someone's going to call me or ask me, hey, you didn't tell me about this great lead program that you guys have. Well, there aren't any that don't cost. So, and it's hard to find good lead sources for this. So I will tell you that the best is by word of mouth and by people that you work with. And if you have clients out there, if you haven't asked them this question, among other cross-selling questions, you should be. So again, he made quite a bit of money on that sale, but more importantly, his client didn't have to go to someone else. They stayed home, basically. And now, as you probably know, clients that have more than one product line with you are much less likely to ever change and work away from you than those that don't have. Some prospecting sites that might help you a little bit here, freearissa.com. Another one would be larkspurdata.com. Sorry. And then judydiamond.com. I do know Judy Diamond has a 30-day free trial, so you can go in, you can register in their site, and they will provide you with employers in your area And I've done this search before. It finds all the companies that have a 401k plan, I believe it is 401k, in your area, and it lists the some data about the company and the contacts. Again, these aren't they aren't companies that said, hey, I want you to call me about my termination of my plan or things, but there's a lot of information you can learn as a lead into reaching out to them. Again, they have a 30-day free trial. So just some ideas about companies that can help you locate businesses. Again, if we're going to make calls and get turned down, we just will be calling on a company that has the capability to help you with multiple sales. Okay, so moving into the other section here, which is in-service withdrawals. Now, I mentioned this in the beginning that we'll talk about people retiring, people leaving, and have to do something with their plan as a whole. But another segment of this is the in-service withdrawals. And this is called, they call them age-based in-service withdrawals. And what this really is referring to is withdrawing funds from an employer-sponsored qualified plan while the individual is still working and contributing to the plan. And so if allowed, this withdrawal if completed as a direct rollover, can allow actively working employees, and that's typically those over 59 and a half, although I've actually helped someone that was before, or that was pre-59 and a half with this, to purchase an IRA annuity without incurring income taxes or penalties. So again, helping people that are still working, still have the plan, taking advantage of the in-service withdrawal that's written into their plan document to access some of that retirement money. Okay, well, what are some advantages and why would they want to do that? Well, it kind of goes back to where we were before. They now have control over retirement funds that they didn't have control before. So they can choose what product that they would like. Again, in what we do here and what we want to help you do is with fixed products, but they could actually do an in-service withdrawal and go to Fidelity. So again, maintaining control over retirement funds, expanding the investment choices, or offering a better fixed-only option. They can't lose principal. There's no fees. Participate in the growth of the market without downside risk. And again, they have 100% control of the account and decisions on the account. And they can add an income rider if they like. Now, again, this may not be as a whole a bigger balance to roll over, but still, you'll have a potential new client. And when they do retire or leave that employer, they're going to come to you for the remainder of that and any future sales, hopefully. So who's eligible for an in-service withdrawal? The participants must meet certain requirements. Guidelines may include a minimum age restriction, usually 59 and a half. Length of service requirement may be in place, so it may be oftentimes it's 2 to 5 years, or it might be both 59 and a half and 2 years. And the plans often limit withdrawals to the vested employer matching contributions plus earnings, as well as rollovers and earnings from previous employers' plans. So it could be a rather large rollover. So again, how do they find that out? They have to go to their plan administrator. So which plans permit these? Well, 401k plans can. Employee stock ownership plans could. Cash balance, target benefit, and money purchase plans may permit this withdrawal. So it could be any of those. Some rules that we want to take into account. Companies may impose penalties, including charges and suspension of plan contributions. The asset liquidation may result in penalties. It may result. Loans may be allowed in employer retirement plans, but they're not allowed in IRAs. So, once that money is transferred over to a traditional IRA, then you cannot borrow from an IRA or use it as collateral, but you could if it were in your current plan, if they allow it. So some steps that are involved, it's very simple actually. You have your client contact the Human Resource Department's retirement plan administrator to determine, does the plan allow it and are they eligible? And have them ask the question, can I take an in-service withdrawal? If the answer is yes to both questions, then next would be which assets are eligible, how much can be withdrawn, does the plan impose penalties, including suspensions or deferrals of companies' contributions for these withdrawals, and what are the processing requirements and distribution timelines? So once the questions are answered to your client's satisfaction, the next step is to discuss options for a transfer to an IRA. This is what you do. This is what you do and we do for you. We do it with you. You've got the case in hand. You want to know what are some options. That's where we can help you. Okay. So, kind of wrapping up here, the average participant does not understand the options available to them. I was thinking this morning that, we all get statements. Hopefully they're getting statements, but what is the most decisions that our clients have to make while they're working with the retirement plan? Most of the time it's, how much do I put into it? What percentage do I have withdrawn? And what are my investment options? And once they do it, most of the time, that's it. They let it go. They let it grow. They look at it. They look at the statement. They may or may not. Again, it all depends on the person, but I know a lot of people, when I worked for previous companies, they get the statement and they don't know if they should make a change or not. There's no one they really can go to, but that's about the extent of their decisions. So when they get to retirement or when they have to leave an employer, there's a lot of other things you have to think about. Get your health insurance in place with the new employer, all the other things that have to be decided when you change jobs. And oftentimes the last thing is, what do I do with that retirement plan? So again, our job is to let them know that transition can be done very easy. There's very few key things that have to be done, but they're important ones, of course. And that is, what do I do and what do I want that money to do now? I have no guidance on this. So make sure that you do the best, I think, in this current year of branding yourself as a person that can help them. Even though the hat that you wear every day might be property casualty, or maybe you're a life expert, but you want to brand yourself as the person that can help them in rolling over retirement monies, because there's a lot of it out there and there are a lot of choices, and our job is to help them by educating them, to guide them, to recommend a new plan, and do so without any penalties or taxes. We want to transfer that over, if in most instances that's what they want, is to continue with the retirement plan. And our product of choice with this is something that cannot lose principal and has a competitive growth rate, but something that you don't have to worry about and lose sleep over. So again, if I can help you in some way with upcoming business and rollovers, please let me know. We have a great team in the annuity department that's here to help you with your retirement rollovers. This is a time of year we talk a lot about qualified contributions. If you've got clients that are actually looking for contribution IRAs, there are some companies that do have that still on their product line, but we'd be glad to visit with you. I appreciate your time today. And if you have any questions from this, please let me know. I thank you. Have a great day.